Welcome back to Investing with Confidence. I am your host, Joshua David, an online trading academy, the sponsor of Investing with Confidence, on their 25th year, teaching people how to trade and invest with the financial markets, whether it's stocks, options, futures, forex, or cryptocurrency. If you happen to just tune in, Al was shedding some light on how to use the markets with different styles of investing, whether you're long the market, short the market, which is benefiting in down markets, but using it for income potential or long-term wealth. If you happen to miss tickets to that investing class right here in Bloomington, just call 952-814-4410 or just text the word invest to the number 484848. When you get a text back, there'll be a link in there to get set up with this investing class. We do them here in Bloomington, also online. And you're also going to get a financial quick start kit just for getting set up. That'll help you get started right away. So, Al, as we did talk about in that last section about up markets and down markets, it's just two different opportunities within, whether it's stocks or options or futures or Forex. We have a lot of listeners that want to apply multi-directional strategies, which is up or down, in income potential trading. So let's talk about some of those different strategies and techniques that you're seeing a lot of people want to learn about. I mean, Online Trading Academy teaches these, but what are some of the main ones do you think a lot of people are looking to learn and grasp in income-style trading?
Yeah, well, let's talk about income-style trading for a minute. There's a difference between how you trade for income and how you invest for long-term wealth. So it's important to know both of those. And it's important to know how to benefit in both of those areas, whether the market's going up or down. Sometimes it means knowing how to make quick changes, maybe, knowing how to do different things in different directions. And sometimes the market within a day or a week or a month can go in many different directions. And each time that happens, that's an opportunity. Who's taking advantage of that? Well, the institutions are, the big players, the people with money. They're taking advantage of every market direction, basically with those short-term income-type trading strategies. And the ironic thing, Josh, is that most of their clients are put into something different. It's more of a long-term, only one directional strategy. It's an upward movement strategy. And we know the market doesn't just go up. It goes up, down, sideways.
It's crazy. You think about that. I mean, if they're putting their clients in something different, there is a discrepancy there. It's kind of, I would say that's a conflict of interest, really.
Well, it's a business decision. And I guess I have to hand it to them that they're looking at boosting their bottom line the best way they can. And they found a way of doing that, which involves that long-term strategy. And the reason that that's so beneficial to their business style is that it becomes close to a hands-off kind of a position for them, where they put somebody into a long-term strategy and tell them not to worry about the upward, downward movements. Just hold on. And if you do that over the course of time, and that means many, many years or decades, everything's going to be fine. You'll have a profit. But what they're missing out on is the shorter-term opportunities. Even if you are looking at long-term wealth, there are things you can do on a shorter-term basis to boost the returns and to protect what you have.
Yeah, I think in that investing class that you teach, you actually give visuals of what people are missing out on in these markets. It's crazy.
Yeah, and that's the important thing. What are you missing out on? Because this is an important thing in your life. Not only what you have to function with now, what you're living on now, but even more important when you retire, because then the income that you have from a job is gone, but the cost of living is still there. So what are the things that the institutions are doing that are different? Not only are they geared towards shorter term positions, in other words, you get into and out of something in a shorter period of time, not decades, not years. If you need additional cash for whatever that reason might be, whether it's an emergency or you just want to up your lifestyle or just pay your bills, you can't wait 20 or 30 years to get the money to do that. So the institutions are using things like the options market, like the futures market, the foreign exchange market. Now more and more people are getting into cryptocurrencies. But they're using these assets in a way where they can benefit whether the market is going up or down. That's multi-directional. And there are some assets that you can trade where even one trade, one investment is multi-directional. It doesn't just require something to go up or down for you to benefit. It can go up, down, or sideways, and you still can benefit. These are the things that we talk about in these classes at least make you aware of that the financial advisors and whatever education you're getting from whatever source really are not covering.
Yeah, I just want to double down. I mean, we like to say double down around here from our favorite friend here, but we have. Al was talking about at the beginning that income and wealth investing might be a little bit different, but you need both. You can't just do one or the other because your income actually fills your wealth bucket, your retirement, your 401ks and IRAs. And just to go further, he was talking about the institutions take advantage of these strategies. They're not just in buy and hold. They tell you to go and buy to hold, but they're doing other short-term strategies. So they're conditioning you to follow their guidance. I mean,
Right.
it's funny if someone has a Series 7 or 64, all those crazy things that are out there, they think that they're helping them and they're doing things for their client's best interest. Well, sometimes they don't have to by law. So think about that. That's why it's important to understand what these terms are, what these concepts are, and really so you can make smart investing decisions. And just to define, when Al's talking about short-term trading, it doesn't mean day trading. I mean, that's kind of a thing of the past. It's just your positions don't last, like he said, decades. Maybe you're in positions when the markets are going up. Maybe investors are in positions when markets are going down. So you're benefiting or have the opportunity to benefit in all directions. So as I was talking about, you have a multi-directional strategy, and he talks about that and introduces you to those concepts in these investing classes right here in Bloomington. We're actually by the Mall of America, just right off 494, real easy to get to. And he teaches these on Wednesdays, also Saturdays, and these are classes where we've taught thousands, just like you, are many strategies which are designed to teach you to make better investing decisions. So just call 952-814-4410 for callers 1 through 10. 952-814-4410. When your callers 1 through 10, you're also going to get a financial quick start kit just for getting set up for one of these investing classes right here in Bloomington. I like to make it easy. You can also text the word invest to the number 484848. You're going to get a link back to pick a date for this class. There's 2 steps to this. You got to pick a date when you get that text back. So do that so you can get that financial quick start kit as well. So Al, you talked about the institutions they're benefiting in up markets. They're benefiting in down markets. They're always creating income, right? And they're using other assets that they're telling their clients to get into. They're telling their clients, hey, buy mutual funds from us. Maybe buy some ETFs, which would be great if they're pumping that up a lot. But they're not. But you mentioned futures, Forex, and options. Now, our listeners are probably wondering, well, why would I want to use that? Why would futures be better than Forex? Or maybe why would either one of those three have a better potential than stocks?
Well, part of what you just said there is part of what we really concentrate on, and that is identifying what the right asset is for you.
Yeah.
For one person, it might be Forex. For another, it might be futures. For another, it might be options. And for some, it's a combination of those things. The great thing I think about OTA, Online Trading Academy, is you have access to education and strategies that are involved in all of those different assets in one location. And part of it is identifying where you want to be in the future, where you are now, where you want to go. What's the best way of getting there for you? What's the most efficient, the most effective way of getting there? Sometimes it comes down to just personal preference. And we don't really have a bias as to what you trade, how you trade. You mentioned day trading. Some people want to do that, and that's fine. We can show you how to do that. Most people are looking at more of a hands-off kind of an approach where they are building their portfolios, they're building wealth, but they don't want to be involved on a daily basis. So you kind of choose how you want to trade, and we can help you, go down a path that gets you to that point. But the most important thing is, and this is part of what keeps this simplified for you, is that we have a foundational strategy, an investment strategy, which, I'll say this right now, it's a timing strategy. And a lot of people are going, oh, you can't time the market. I've been told by numerous people that no one can time the market.
Who tells them that?
Typically, those are people that can't time the market or that people that don't want you to know how to do it. Well, think about it. If you knew how to time changes in the direction of price and the movement of price, would you need a financial advisor or broker to do that for you?
Conditioning again. They're conditioning the public.
Of course.
Yeah.
It's all conditioning to provide a benefit for them and make you think you need to use them to do this. part of what we do in this class that you are talking about, the introductory class, is to help get you to the point where you can decide whether this is something that might be right for you to pursue or not. And for some people, maybe it isn't. But if it is, if you want to take control of your assets, have more control over what happens to your financial life, then make sure that you do it in a way that you have opportunities that put the probabilities in your favor of having it work in your favor. How you do that is to get the right kind of education that teaches you what makes price move. That's the most important thing, really. Once you get that down, you can plug any asset into that strategy if it shows you how to identify price movement. And what we want to look for, the ideal situation is where a price changes direction. And those are turning points that start or end trends. If you can identify those points, that gives you not only the lowest risk entry point, but the highest probability of it working, but even greater, the highest profit potential. So the goal should be high reward, low risk. Those are the two of the things that we teach. What we find, Josh, is that most financial advisors eliminate two of the most important components of a trade. There's three components. There's an entry, there's an exit if you're wrong, and there's an exit if you're right. What the financial advisor world really concentrates on is just getting into the market, regardless of the price. Let's not worry about the protection part, because if you hold on for decades, the market will always come back. Let's not worry about profit potential. You worry about that at the end of that decade or 2 decade long period of time, then see what's there in your portfolio. That means you're missing out on a lot of opportunities. It minimizes the potential returns that you can have, and it puts you in a situation where you are you're the victim or the potential victim of a bear market or a major correction, which means your portfolio might have to work hard for 10 or 15 years just to get back to where you were before it started to go down.
Yeah, you kind of reminded me of something. When you're talking about probabilities within the financial markets and I have a good friend that does a lot of sports betting. And, he's always looking at the different odds, the different what's happening with each game and the spreads and everything. So he has a strategy with his sports betting,
sure,
which is putting the odds in his favor, giving him a higher probability of success with his sports betting. But he told me this the other day. He's like, you know what? I have all this strategy with my sports betting odds. I put in odds in my favor. But you know what? I've never learned, and I don't know how to put the odds in my favor in trading and investing. And I think a lot of our listeners can kind of relate to that. They don't have an actual strategy, and it's nothing you're doing wrong. It's just you haven't been educated on it. And so they don't have a strategy, and they're not putting the odds in their favor to make smarter and better investing decisions. And it starts with a little bit of knowledge, as Al was talking about, but also you need the skills to do that. But also use the right markets. When he's talking about the futures market and the Forex market, that would be you have markets that are open 24 hours a day, more opportunity to do things off hours, say in the evening. You have leverage, which basically means you can use a smaller amount of capital to control a much larger asset. Now think about that. In sports betting, you have to use all of your capital. When in the financial markets, you can take pieces of that and use leverage. So that's being more capital efficient. And I think a lot of our listeners really can relate to wanting to be more capital efficient,
sure,
using their money wisely in the financial markets, stocks, options, futures, Forex, or even cryptocurrency. We have education on all of them. Our sponsor, Online Trading Academy, they have investing classes that Al teaches here in Bloomington. We're by the Mall of America, not too far off 494. I can actually see the highway from here. So I want to invite you to investing class right here in Bloomington for callers 1 through 10. You can call 952-814-4410 or just text the word INVEST to the number 484848. We'll get a text back to you right away with a link to get set up with this investing class. Covers some topics like how to time the market, as Al was talking about, by letting price come to you. Our step-by-step rules-based strategy for trading any asset like options, futures, Forex in any market. 952-814-4410 for callers 1 through 10. Al, coming up next, I want to talk about how most of our listeners are probably looking for financial knowledge, but it impacts them negatively the most way. We'll be right back. That didn't make any sense.